Hello fellow traders, it's Rafał Zuchowicz and welcome to my channel. In today's video we will talk about extremely important and underestimated by traders topic, leverage. Why am I making this video? Because I've been in touch with some people recently that they are very excited about this hype with cryptocurrencies, Forex and stock. Now in 2021 it's crazy, like in 2017, but they don't understand leverage and they killed their accounts within 1 week. So it's very sad, very upsetting, because that's their savings. So I decided to make this video. There is one already on my channel, the previous one, very short one, but in this one I want to get in very deep topics. So whether you are a beginner or an advanced trader, I think you will find a lot of good information in this video. So let's talk. Let's see if leverage is a blessing or is it a curse. What will you learn in this video? So as I said, we will talk about, first we'll define what's leverage. We will go through examples, so it's easy for you to digest, to understand if you are the beginner. But I know that a lot of experienced traders, they still don't know how to use it, how it really works. So this is very surprising. How to use it, why to use it, how not to use it. We'll talk about tips and tricks, so make sure you stay until the end, because I will teach you something, and how to set it correctly in your trading platform. This is very, very important, because your trading platform, it can tell you exactly where you are, how much you're risking, and you need to learn how to use your tools. So what is leverage? Leverage is the ratio between the amount of money you have on your trading account and the amount of money you can trade. This is different. So leverage allows you to trade positions larger, much larger than the amount of money in your trading account. This is a very important sentence. You will see on how many levels. Leverage is expressed as a ratio, 1 to X number, and we will see how it works. Let's go through some leverage examples. We will use $100 account. Let's say you have a small account, or you don't want to put a lot of money on your trading account. You want to learn and you want to see the power of leverage. If you decide to have one-to-one account, you will be controlling only 100, no brainer here. So if you decide to buy shares worth $25 each, then you would be able to buy 2 of those. If you decide to have account with 1 to 5 leverage, then you will be controlling 500. So 1 to 5, that means that 5 times more. So you would be able to buy 20 of those shares, which is quite a lot already, not 2 but 20. Now, if you decide to go with 1 to 100, you can control assets worth $10,000. Of course, this won't be possible with controlling shares, but maybe there are some brokers that would allow you. But this is mostly for Forex trading, 1 to 100, these bigger numbers. Next one, 1 to 500, and that's possible, of course, as well. I know it sounds crazy, but they are even 1 to 1,000, 1 to 2,000 used to be. These days, it's not so easy to get a trading account with 1 to 500. I will leave the link below for you if you want to open 1 to 500 and experiment. Then you can control 500 times more than you have. So $50,000. Amazing. You've got only $100 on your account. You just put 100 and the 50,000 is what you can control. So what does it mean for us that we can control all these big numbers? We can make or lose money much quicker in that way. So let's go again through some examples. If we have this 100 accounts with the 1-to-1 ratio, we can open a nano lot. So it's called nano lot, which is 0.001 with like no leverage. So basically 1-to-1. We decided no leverage. And then on Euro USD, let's use this with this currency pair as an example, 1 pip would be worth $0.01, so 1 cent. So to make $1, we would need to make 100 pips. So 100 pips movement would earn for us $1, and the pip is the 4th digit after the comma. So it's quite a move. It's doable during one day, but as you can see, that would give us only $1, so 1% of our account, which is not much. But now, if we decide to use the account with 1-to-100, which is possible with trading Forex, so now our 100 accounts, we can already trade one mini lot, which is 0.1. And that means that 1 pips is worth $1. So every movement of 1 pip will gain for us, or we will lose $1. So making 100 pips, we will make $100. Easy. Now, if we use the 1-to-500 and we max up, so we will use half a lot in that case, because we are controlling $50,000. That means that 1 pip movement up or down will be worth $5. So making 100 pips would make us richer $500. So this is quite exciting, isn't it? If you just invested $100 and using this massive leverage, you can go all the way to 500. So that's why Forex and the leverage instruments are so popular among traders, retail traders with small accounts, because they can make money so quickly. Really, like 100 pips movement with a good news, it can move very quickly, and then you can have 500, 5 times more than your account. And recently, like 2 days ago, or I think yesterday, I spoke to one of my subscribers. He was very excited that he made 100% of his account using one of the strategies from my YouTube channel. And he was thanking me for that, but I told him, like, listen, if you made 100, I think you are over leveraging your account. And half an hour later, he told me, you were right, I just lost this and this much because I used too much of a leverage. So you need to remember it works both ways. So leverage is a double-sided sword, exactly. You will be losing your money with the same speed. So the subscriber of mine is a very good example. You need to remember this always, that it's not only working up, making your account, but as well damaging your account. Plus, bear in mind that starting every trade, you are already on a losing position, because you've got the difference between the ask and bid price, so-called spread. So you are already minus 1 or 2 pips, let's say 1 pip, so $5, already minus $5. So bang, this is a warning for you. You need to be really careful with the leverage, and that's why I'm making this video, to warn you guys and show you how to use it in a smart way. let's go through a losing examples as well, so we can make or lose money much quicker. So $100 account with 1 to 500, a half lot, so 1 pip worth $5. If the price goes back 20 pips, so before we were trading and it went 100 pips in our direction, but of course it doesn't have to go in our direction, it can go against us, and it takes only 20 pips, not even only 20 pips, because with the spread you are already minus, so even less than that, and you lost 100. And 100, this is your account, so 0, you don't have account at this point, just 20 pips, just 20% of what you were aiming in a previous example. So this is how it works. You need to bear in mind always that this is double-sided swords, and you can lose money very, very quickly, as quickly as you are making this money. Very often traders would ask me, what leverage should I choose or should I use? So there are two different questions actually, because you can choose the leverage up to the maximum, so 1 to 500 on your account, but it doesn't mean you will be leveraging your positions 1 to 500. These are two completely different things, what leverage you are using and what leverage your broker allows you to use. So for example, if you have this account with 1 to 500 and you deposited $100, as we said in a previous example, you can trade half a lot, euro, USD. But you don't have to do that. You don't have to go to the maximum and trade half a lot. You can trade still nano lot, mini lot, micro lot, you name it. You can just go much smaller, use 1 to 1 leverage, or you can use 1 to 10 leverage, 1 to 30 leverage. You don't need to max out, but you can have it available on your account. So the leverage works not only for the certain position, so not only will it allow you to trade big in this one position that you started with, but it means that it will leave more margin for you for the future trade. So for example, if I have this half a lot, a possibility to trade on euro dollar, I can open just 0.1 of lot, and I still have 0.4 available for me to trade. So if I decide that, okay, there's a confirmation of this trade, I want to add, I want to make a pyramid, that's when I can use the remainings. Or I see another opportunity on Australian dollar to New Zealand dollar, for example, and I want to go long on this one, then I still have some money left to trade. So you don't need to max out everything in one trade, not even in 10 trades. It's up to you. This is just the maximum available. So it's quite tricky still, because there is a psychological aspect to all of that. When you have this 1 to 500 and you are a smart guy, you don't use 1 to 500, you just have it available, but you are trading with 1 to 50, for example, using just 10% of what's available. But then the trade is going against you. This is the biggest mistake that traders do, and how they wipe their accounts. And then you have this leverage, this 1 to 500 available. So you add another position because you think that you will like average the price in your favor. And then the trade goes even more against you. So then you add another position because you think that no, this has to go in my direction. I'm sure about that. So then you are minus more and more and more, and because you have large leverage available on your accounts and you are like completely stupid at this moment, you don't know what's going on, you are losing money and you're trying to rescue your accounts, rescue your trade, you keep adding to this losing position. But imagine you didn't have this leverage, you were restricted only to 1 to 20, 1 to 30, 1 to 10. Then you wouldn't be able to make this stupid decision, let's call it stupid, and you would survive, because your account, the trade would need to go really a lot pips against you for you to lose your account. But because you are adding to new positions, then it doesn't need much to wipe you out. So this is the thing, that let's sum up: 1 to 500, you don't need to use everything. You can use smaller, but sometimes you keep forgetting, you don't know what you are doing. Even the system might be tricky, your platform, you restarted your platform, you were trading just mini lots, but then your platform restarted and it put one lot. You were in a hurry, you traded, you didn't check it. I know stories like that as well. A friend of mine, in front of my eyes, she placed a trade on 5 lots and she lost everything, basically, because she could put these 5 lots. The leverage allowed her to do that, but she shouldn't have done that. And the trade went completely against her. She didn't close it. She was waiting for it to come back, and it wiped out her account. So unfortunately, sad story, but that's how it works. If she wasn't allowed to have it, then it would never happen. So my advice is actually to use smaller. With experience, I learned that it's not worth to use all this massive leverage unless you have a specific strategy for that and you want to be very aggressive, you know what you are doing, and either all or nothing. That's your policy. Then be my guest, go for the large one. Okay. No need to deposit all your funds. This is the another idea. You don't need to put everything at once in your account. You can have, for example, you have $1,000 that you want to trade, but you can use $100, put $100 on your accounts, keep $900 on the side, and use the leverage 1 to 10, and now you have 1,000 available on your account, right? But you might say, yeah, but I was thinking, of putting 1,000 and using 1 to 10 on 1,000. Okay, so put 100 and use 1 to 100 leverage, and then you will have your 1,000 on leverage 1 to 10. But if the trade goes against you, if you act like in a stupid way, then you will lose only 100 and you will still be in control of this 900 that are on your bank, in your bank account, in your pocket, and you can put another 100 next time once the emotions are gone related to this particular trade. So this is very good strategy. I should actually make a separate video on that one, explain it properly, so bear that in mind. So pros and cons of leverage. So no need to have all your money in the brokerage account. So this is a good thing. If you have a leverage, you don't need to use everything. You can just put a little bit and have control over the rest in a safe place. Uncapped, unlimited profits. So with the leverage, as far as the price goes in your favor, that's how much you can earn. It can go up to the sky, basically. To the moon, some would say. And then you can earn really loads of money. So limited loss, this is good thing, that you can earn a lot but lose only so much, of course only with the right broker, because some of them might not allow you. I mean, they might put you in minus. They should close it, but there might be slippage, so be careful, make sure you use the right broker. You can quickly wipe out your accounts, that's the thing. So that's what we said. This is the cons. On the cons side, with the big leverage, starting the trade, you are already on a little bit of minus because of the difference, and then, you know, very quickly 20 pips move, as we said before in our example, and your account is gone. Do I have to use it? No, you don't have to use it. You can choose what leverage your account would have. So when you choose the account, you are choosing it with the broker that I'm using, that you see me using on this channel. There is 1 to 30. You can get up to 1 to 100, but you need to prove that you are a professional trader. And I think this is very smart. They are very responsible, being very responsible doing that, because anything 1 to 30 is already plenty. It's really, really plenty, trust me. Having 1 to 500 doesn't mean you have to use it to the maximum. That's what we said before. You can have 1 to 500, but you can use much smaller leverage actively. So it's not a must. Let's jump into the trading platform now. I have just opened a ticket for Euro USD and the information card for Euro USD as well. And from the information card we can see that our leverage on my account is 1 to 30. And as I said before, this is plenty. It protects me from making stupid things to over leveraging, and 1 to 30 it's already a lot. And it means that I only need 3.33% of what I want to trade. So that's the size of my margin. Let's have a look at the ticket and what it means in practice. So it means that if I want to trade one lot, which is a lot, that's 100,000 euro value. If I want to make a trade of this size, I don't need 100,000. I only need, my account is in British pound, so I only need 2,880 British pounds on my account, and I can already control 100,000 euro. And if we want to see what it means in making profits, that means that the pip value would be 7.14 British pounds. So each time this digit will, this 6 will change to 7, 8, I will be earning every time 7.14. There's some commission, spread, so it tells you 0.2, that was the spread I was talking about, that just by opening a trade you are already minus. So in this case you are minus 143 British pound, because there is a spread involved in this trade and some daily swap. But what's interesting, we can set up the stop loss and take profit. So if you are not familiar with leverage, you don't know what leverage you are using and what it means for your take profit and your stop loss, it's very useful to use this kind of cards while placing a trade, instead of just placing it you know, from the quick card on the left hand side. So now I can set the take profit, and I can go pip by pip, or just, you know, if I want a 100 pips trade, I just need to change this one digit, and it already sets here, you see, 100 pips profit, and it tells me that I would earn 714 almost British pounds, having on my account only 2,880. So that's plenty. I would have over 700, risking only this one, making, I mean, not risking, but having as a margin, because the risk I set up in a separate window. So this is my stop loss, and let's say I play trade 1 to 2, so meaning that I risk 1 to gain 2. So if I'm gaining 100, I will be risking here 50 pips, and doing so, if I hit the stop loss, that means I would lose 357 British pounds, so half of this one. Am I right? Something around, because there is this spread. So you know exactly how much you are risking, and if you are willing to take this risk, because it might be a lot for you. 356 if you have only 2,880 on your account. But this card is here for you, and you can see the risk that you are taking. You can drop all these values. If we go to 0.5, then everything will change, and you can see that now you will be gaining only 356, and if you lose, you will lose much less. So that's how you can control. If before you made a realization that, okay, this is too much, I don't want to lose so much if the trade goes 50 pips against me, so either I'm changing my pip size, and then I'm losing less, 214. I'm risking, not losing, because this is not a losing trade yet. I'm risking much less, but you might this might be not enough, 30 pips for the currency pair that you are trading. You might need to set it to 50 pips. But if you are not comfortable with such a big number, then it's easy. Just change this one. You can either change one by one, and you can see how it's changing. So you can see that half a lot, you are risking 178. If this is too much, you can go lower. You can go and drop the risk at this point. So you can put only, okay, I want to risk 100. So then it tells you that, okay, if you want to risk 100, just minus 28 pips. But as we said before, now we want 50 pips. So this is your risk. So you need to change the volume. You need to change your leverage. So don't go to the maximum with this leverage. And then you go to just experiment 0.3. You can go 0.27, 28, and this gives you 99 pounds of risk, and you might be happy with this one. Then your margin would be 806, and you might have still on your account this 288 that was before, but you don't need to go to the maximum. You don't need to squeeze everything from your margin, so from your account. So this margin is basically what size of your account you have. And for example, you have 10,000. So we can see here that with the 10,000 pounds, how much you can you could, okay, 3, 4, so around 375, let's say 70, 60, 3.5, 45. Okay, so around 345, this is the maximum if you have 10,000 British pounds. But then again, you don't need to always go to the maximum. You can lower it and you will have all the numbers here. So come to this platform. Link below if you don't have a platform that allows you to calculate all these things. There are some online calculators, you can refer to that. The leverage calculator, the PIP calculator. In the platform I'm using, everything is built in already, and it's easy as that. So I think 1 to 30 is plenty. Be careful with your leverage. That's the main message here. Just protect your profits. Let's have a quick look into the Bitcoin as an example of the power of leverage in both ways. So let's say you entered at this candle at the bottom with leverage 1 to 3. So you got your Bitcoin from 11,300, let's say 11,000, and now it's at 56,000. So you made 45,000 on each leverage. So 1 to 1, 1 to 2, 1 to 3. So you made 3 times 46,000. So you made 136,000 if I'm calculating right. And you are a rich man. So instead of making this only 46,000 only, you made so much. But imagine you did the same trade, you missed this movement, your friend told you that he is in this movement and you are super excited. He made already all this money, the price is at 42,000, he entered at 11. He's telling you, man, I made 41,000 already profit. It's crazy, 4 times my investment. This thing is going up to 100 easily. And you are like, screw it, I want to be a part of this movement. But since he already made so much, so if I just enter 1 to 1, I will never catch up with him. So let me enter with the leverage 1 to 3, only 1 to 3. And the price was at 42,000 at this point. And you were unlucky to enter at this local top. The price made a small pullback. It's just 2 candles, weekly candles, but just 2 candles. It made a pullback to 28, so it's 14,000. That means it's 30%, and you entered 1 to 3. In that moment, this 30% just wipes out your accounts, and you've got 0. So the Bitcoin that you got you spent 42,000 here, and the pullback of 14,000, 14 times 3 gives you exactly 42, and goodbye depot. So you just lost 42,000, and later the price beautifully went all the way up to 57, giving 15, so 45,000 profits if you didn't miss on this opportunity. So this is the power, and we are talking only about leverage 1 to 3, not 1 to 500 as I mentioned before. You just leverage 3 times your money, only 3 times, and this for 2 weeks was enough to make you lose $42,000. So think about it and consider this example with as a warning. Let me put it this way. Okay, all the best with your trading. Use your leverage to your advantage and make lots of money. Take care. Bye.